Imagine your home being able to pay you an income.
I think it's a hell of a good idea.
You don't have to make any payments. The interest is actually compounded, then it gets added to the mortgage.
The reality is the interest rates that the reverse mortgages are calculated on are almost double. The fees are more than double. And the foreclosure rate on reverse mortgages is tenfold.
Some people see them as a scam.
Someone wanted to take grandma's home without ever breaking the law. They wouldn't kick in the door. They wouldn't pick a lock. They'd wait. They'd wait until her grocery bill jumps again, until her prescriptions cost more than her pension check, until the roof starts leaking, until the kids are too busy to read the fine print. Then they show up. Nice suit, soft voice, clipboard ready, and a pitch that sounds like help. It's not a loan, it's equity access. It's your money, tax-free, you can never lose your home. But here's the problem. None of those lines are actually true, because right now in Canada, a quiet financial wave is building inside seniors' homes. And it's not creating wealth, it's extracting it. In just the last year alone, Canadian seniors took on more than $8 billion in reverse mortgage debt. That number is growing nearly 6 times faster than the regular mortgage market. Let that sink in. A debt product for vulnerable homeowners is growing 6 times faster than anything else. That's not just a red flag, that's a signal flare. And in about 60 seconds, I'm going to show you a buried number inside the financial reports that explains exactly why this is happening and why the risk is accelerating faster than most families realize. But first, we need to talk about who's getting hit, because these loans aren't new. Reverse mortgages have been around for years. What's changed is the playbook. What's changed is the targeting. Let me say this clearly. If you're over 55, if you own a home anywhere in Canada, or if your parents do, you're already in the blast radius, because this isn't a niche product anymore. It's going mainstream. Why? Because for a lot of banks and lenders, seniors are the last untapped equity market in the country. We've already exhausted first-time buyers. We've already squeezed young families. Now they're turning to the one group who spent a lifetime paying off their homes. And here's how they're doing it. They start by calling it equity release. They send out glossy flyers that say things like tax-free money with no monthly payments. They tell you it's not like a regular loan. But here's what they don't tell you. The moment you take that loan, the clock starts ticking, and every month that goes by, the interest quietly swells in the background. Some Canadian families are waking up to find that the entire inheritance they thought was there has already been eaten by compounding interest. No arguments, no family meeting, just gone. And here's where it gets worse. I'm about to show you the 3 danger clauses that most people miss when they sign these contracts, including the one line that can legally force the sale of your home over something as small as a missed property tax bill. But before we go into the fine print, here's something that might rattle you. This isn't just hitting people in crisis, it's targeting homeowners with no mortgage left at all. People who thought they were done with debt forever. People who were just trying to cover the basics. Groceries, medicine, repairs, and they ended up triggering a financial trap that snowballs quietly behind the scenes. So next time someone says, you can't lose your home with a reverse mortgage, ask them why that line never appears in the actual agreement. Because the real risk isn't in the pitch, it's in the fine print. And in about 15 seconds, I'm going to walk you through the exact lines that lawyers and financial advisors are warning families about right now. But before we do that, I want you to see where this is heading. Because if this trend continues, and if interest rates stay high for even one more year, we're going to see a wave of elderly Canadians being quietly forced out of their homes. Not by scam artists, but by paperwork they trusted. Now we're stepping into the 3 most dangerous parts of a reverse mortgage contract. The traps nobody reads until it's too late, and right after that, I'll show you the one buried number that reveals just how fast this trap is accelerating and why the clock is ticking faster than most families know. Let's step into the fine print, because this is where it goes from risky to dangerous. There are 3 clauses buried inside most reverse mortgage contracts, and if you miss even one of them, you can lose the house, not years from now, not someday when you die, but while you're still living in it. Let's start with the first one. It's called the occupancy clause. Sounds harmless at first. Most lenders say you must occupy the home as your primary residence. Seems fair, right? Until something unexpected happens. Let's say you fall, you get sick, you need to move into a care facility for a few months, or go live with family while you recover. Even if everyone expects you to come home, on paper in the lender's eyes, you don't live there anymore. And the moment that happens, they can legally call the loan and demand full repayment. Now imagine this, while you've been in recovery, your house value has gone up, but so has the interest on your reverse mortgage. The balance is bigger than you ever expected, and suddenly you're being told either pay it all back or we sell the home. That is how people end up losing a house they thought was safe, while they're still alive and nowhere near ready to move. Now here's trap number 2. This one catches even more people. It's the tax and insurance clause. It sounds like a formality, but it's a financial landmine. With a reverse mortgage, you're still responsible for every single property tax bill and every insurance payment. Miss just one tax payment, even by accident. A notice gets buried under flyers. The due date slips by a few days, and that can trigger a technical default, which means the entire loan becomes immediately due, not just the missed tax bill, the whole thing. And if you can't pay back the full balance on demand, they can force the sale of the house, not 10 years from now, not after you're gone, right now. That's why this one line in the contract matters so much, because a single missed tax notice, a single envelope in the wrong stack of mail, can flip your entire future from stable to sold. Now the third trap is the one almost nobody sees coming. It's the compounding clause, and this one is in every reverse mortgage. But almost no one understands what it really means, because the interest doesn't just add up, it stacks on top of itself, month after month, year after year. So the longer you stay in the home, the faster the debt quietly mushrooms in the background. And remember, there are no monthly payments to chip away at it, no gut check when you write a check each month, which means after 5 or 10 years, you're not just paying back what you borrowed, you're paying back interest on the interest. That's how a $200,000 reverse mortgage turns into $350,000 without a single family conversation, until someone finally looks at the statement and realizes the inheritance they thought was there has already been eaten. Now in about 60 seconds, I'm going to show you one number buried inside national lender reports that flips this entire situation on its head. This number explains why this product is exploding right now across Canada, why lenders are racing to expand it into every major city, and why more and more families are waking up to a surprise balance that wipes out every dollar they thought they were leaving behind. But before I show you that number, let me tell you about a real family who got caught in this system. Because what happened to them could happen to anyone watching this. Remember earlier I told you I'd show you the one number that flips this whole thing on its head. Here it is. In the last 12 months, the biggest reverse mortgage lender in Canada made over $120 million just from interest, not from new loans, not from fresh customers walking in the door, from interest already stacked onto existing ones, interest quietly feeding on people's homes while they're still living in them. And here's the part that should make you stop breathing for a second. The average reverse mortgage balance for their customers jumped by more than $70,000 in under 3 years. That's not 70 grand they went out and spent. That's 70 grand in interest, on top of interest stacked in the background. While families thought everything was fine, that's the number almost no one ever sees. And if this trend keeps going, we are not looking at a slow leak. We are staring at a silent drain, where thousands of Canadian families lose wealth they thought was locked in and safe, not because of fraudsters in the shadows, but because of a contract they signed at the kitchen table. Now that you've seen it, let's talk about what it actually means for you, because this isn't about panic, it's about power. Most people think real estate agents only show up when they smell a listing. They disappear once the sign goes up. They only call when they need another signature. I get that. And honestly, that's exactly why I started making these videos, to help the 99% of families I will never meet in person. Avoid getting trapped by timing, by paperwork, or by pressure from someone who's on commission. Because here's the truth. Whether you're thinking about moving in 6 months or 5 years, it is never too early to plan your exit, especially when the banks are already planning theirs. If you want a place to start, something you can literally act on this week, I built a free seller guide for Canadians. It walks you through 7 simple ways to increase your home's value before you list. And just as important, how to protect that value while you're still living there. No pressure, no obligation, no sales pitch phone call unless you actually ask for one. Tap the link below right now, and I'll text the guide straight to your phone in a few seconds. If you're more of a talk it through person and you want to see your numbers on paper, you can also book a simple call with me, whether you're thinking about moving now or you just want a 5-year plan so you're not forced into something later. On that call, we'll walk through your timeline, run your numbers, look at your options, and make sure that if you ever do decide to move, it's on your terms, not the bank's. Because you're not just a homeowner, you're the financial decision maker for your family. You are the CFO of your household. And in a market like this, that role matters more than it ever has before. So don't wait for a statement in the mail to tell you what already happened to your equity. Take control early, protect your value, grab the free guide below,